just to put a little bit of context here, if you go back prior to the financial crisis, the Fed's balance sheet was less than $1 trillion. And basically during the financial crisis, 2008, 2009, they ran the balance sheet up to about 4 trillion. They were buying government treasuries and mortgage-backed securities. And then they held it at about 4 trillion. And I think around 2019, they were starting to let a little bit of it roll off. It might have come down just a little. And then, of course, the COVID pandemic hit in 2020, and the Fed ran up the balance sheet again. This time they ran almost up to 9 trillion. It was just a little, about 8.9 trillion. And now the last year or so, the balance has been coming down. I think the last time I checked, it was about 7.6 trillion or somewhere in that neighborhood. So it's come down a little bit, but needless to say, when you go from a trillion, 15 years ago to now 7.5 trillion, it's a huge shift in the way the Fed has operated in terms of running this huge balance sheet and creating massive reserves for the banking system. And, I guess the question is, what's next? I mean, how does the Fed continue to maintain this large balance sheet, or do they continue to let it roll off and go back to something more normal, calling pre-2008 normal? Or are we in a new world? I mean, are we going to continue to see this large balance sheet persist, and the Fed is going to continue to operate with large amounts of banking reserves, which they of course have to pay interest on to the banking system? What's your thought about what does the future hold for rolling off this balance sheet? Will it happen, and how soon, or will it continue to persist?
Well, I think the balance sheet, which, as you said, was less than $1 trillion and got to 9 trillion, will come down some more. It's down now to under $8 trillion. But now the banking industry has become dependent upon those reserves. They count it as part of the liquidity. They're very used to having that. They've managed their balance sheet. The banking industry itself manages the balance sheet around that. So it's a little different world that we live in. Now, one of the things that is being discussed in the FOMC, in fact, the chairman, Powell, mentioned in his last press conference, was that they were going to discuss the size of the balance sheet at their upcoming meeting in March. And the question will be, how much more, not whether we can bring it down, but how much more can we bring it down safely without creating a new liquidity crisis? And when I say a new one, I would remind people that in 2019, September, the Fed had been in the process of letting some of this government debt roll off its balance sheet. And therefore, the private sector would have to pick that up. And as they did that, they hit a point in terms of the bank's industry's liquidity that they had on account with the Fed, its reserves, hit a point where it caused them, that is the banking industry, to stop lending to funds that were buying government securities themselves. And so interest rates shot up, and the Fed had to re-engage in buying government securities in September of 2019 at a fairly large amount, about 60 billion per month on average. And so there's this unknown, how much can you let the balance sheet come down before you have another liquidity problem? And that's really what the discussion will be. I think most people think it can come down more than it has so far, but no one knows the number. And so that's the world we live in. We live in an environment where the Fed will have a larger balance sheet, and the industry will have greater reserve balances with the Fed going forward. What the right number is, we don't know. Part of that also will be influenced by how much debt the government has to issue. We have record deficits. And so here's the issue with government deficits that will affect that balance sheet of the Fed. The issue is there are three really sources of borrowers for the government's fiscal deficits. One is domestic, that is you and me, banks, they buy government debt. The other is foreign. Japan, China, Europe might buy it. And the third is the Federal Reserve. who bought it in the great financial crisis and bought it afterwards and during the pandemic. So those are your three. Well, we know, number one, that the Fed says we're on quantitative tightening. So they're not buying any more debt at the moment. They're letting it roll off, and the private sector has to pick that up. So that's ongoing. We also know that foreign buyers are not as anxious to get more dollars. They have lots of them right now, trillions of dollars. And so while they're still buyers, they're more modest buyers. So that's not readily there for this very substantial new debt coming on the market. So who does that leave? That leaves the Federal Reserve. And the Federal Reserve has to say whether it's willing to do that or not, because if it's not, there will be upward pressure on interest rates, even without the Fed managing interest rates for its own purposes. And so that's part of the very substantial discussions, I think, have to be going on inside the Federal Reserve and actually the federal government as it looks to its record-setting deficits and its record-setting interest on the debt as we go forward with higher interest rates. So it's a huge challenge going forward. What is the right size of the Fed's balance sheet, and can it maintain it in an environment where we're increasing our debt at the rate that we are right now? It's a huge question.